tax fraud issue or something like that. So maybe you can talk about that for a moment.
I'm not sure I understand the question.
Well, if you have a damage control situation, how can the attorney help?
If you're talking about a potential criminal case or a fraud case, the attorney can help by making sure that the client does not waive any privileges and does not make statements that are damaging to the client.
So it may be that the way that they're going to help is sort of to say to the IRS, you know, this is it. You know, we can't say anymore at this point.
Yes.
And so.
And that's a very difficult thing for a client to understand if you're going to say no to the IRS.
Yeah. So knowing when to say no, that's a pretty important point, and that's a judgment matter that people who do a lot of tax controversies, that's one of the things that they really have to contribute. And there are CPAs, by the way, that do a lot of tax controversy work that may be almost as confident as David, but I feel that the attorney has a special role here, particularly that the privilege that you have is a much better, a stronger type of a privilege than CPAs and other representatives have.
A couple of years ago, the Internal Revenue Code was amended to provide a federal accountant-client privilege, but it explicitly excludes criminal cases.
Yes.
So a client can talk to you in the context of an audit, or even before an audit when you're preparing the return, can talk to you in confidence. But if the client admits that to you that, hey, I cheated on my taxes, and it does turn into a criminal case, then that's not a privileged communication.
They just spilled the beans.
So you become the witness against your client, and that's an awful situation to be in.
Yes. Okay. Let's talk for a moment about items that the IRS might request that the taxpayer may not be required to provide.
Sure. At the beginning of pretty much every audit, the IRS asks for information, usually documents, or possibly even a written explanation, a narrative of a transaction, to explain a transaction. And most people have a knee-jerk reaction, well, if the IRS wants it, I better give it to them. Without ever asking, is the IRS entitled to this information? And they will ask for stuff they're not entitled to. And if it's given to them, they'll likely look at it and see, oh, that's interesting. Maybe there's something I should look at here. The prime example, the easiest to understand, is if you're being audited for 2006, the IRS will almost always ask for a copy of your 2005 and your 2007 tax return. And most people will say, well, you know, what's the harm? I respectfully decline to give the bracketing year tax returns to the IRS. Why? Because they're not legally entitled to it. They cannot summons from me a document they already have in their possession, and they've got the original. Yes. What do they need my copy for? If you give it to them, they'll look at it. If you don't give it to them, in my experience, most times they will not get the original return. Say, I'm not going to get into that. So, and there's a lot of information they ask for that they really, that you have a reasonable response to say no.
Okay.
And there's differences of opinion on that, by the way. But just because I've said that doesn't mean that's necessarily the only way to do it. Yeah. There are very, very highly qualified representatives who will say, well, I'll give them those returns because what's the harm?
And related to that, one of the things that we talked about is that some items might actually be protected under the Fifth Amendment.
That's possible. Yeah. You know, and in a situation like that, you want to be sure you don't give that information away.
Okay. If the audit notice comes and then it specifies a date and a location, are you required to accept those?
No. Well, you're not required to. You can change the date. And the time. You know, that's really a matter of just working out a convenient time. When they send the letter, they got to pick some time, so they send it to you, and if it's no good, change it. The location, if you have to go to the IRS office. It's called an office audit or an office examination. You really can't change that because those people don't have the authority to go into the field. If you get an audit, what's called a field audit notice, where they're going to come to the taxpayer, then you do have a right. What they'll probably do is send you the notice that says, "Dear taxpayer, the audit is set for such and such a date at your office," because that's presumably where the records are. A lot of people will let them in. I don't like to let the IRS into my clients' businesses. They do not have a right to enter the business, even to look around, and I've actually litigated that issue.
Okay.
I would prefer to have it at my office, or possibly at the IRS office. Anywhere but my client's office. I don't want them, you know, having an IRS guy walk around your business is somewhat disruptive.
Okay. Time is going. Let's see here. After the audit's over, you get an audit report. Now what?
Couple of possibilities. You agree. Sign it, send it in, preferably with a check. You know, sometimes you've made a mistake, innocent or not innocent, doesn't matter. You made a mistake, they caught it, done deal, why fight it? If you disagree, the disagreement is likely to be either on a factual issue or a legal issue. If you disagree, you can protest it to a different office in the IRS and get different eyes to look at it.
Okay. Well, David,
Excuse me.
We're pretty well out of time here, and so I think I'm going to leave it at, and just see if you have any maybe last words of wisdom for us in the event that we do have to deal with an IRS audit.
Generally, it's nothing to be afraid of. Just do it.
Okay. All right. So with that, David, I want to thank you again for being on the show today. And David is also going to be in another episode with me here shortly. And so I want to thank the people who are watching us here today. And I hope that you will join us for our next installment of Financial Insider Weekly.